But for our next session, we have Robina von Stein, principal at Contrarian Ventures, and Sophia Graflin, partner at EQT Ventures, to tell us about Climate Brick 2025 launch, how to scale climate tech companies from pre-seed to IPO, a blueprint. Let's give it up for these wonderful ladies.
I'm applauding for myself. There are so few people here. Hi, everyone. Thank you for hanging around for this late afternoon session that we are holding today. My name is Sophia Graflund. I'm with EQT Ventures. We are co-founders of this amazing initiative that we're talking about today. And who are you?
Yeah, first of all, thank you for all who coming here today at this late hour and the amazing weather outside, because what we are talking about is actually a community effort. So I'm super happy that everybody who's here really has time to listen in, because if we can get convinced only one of you to actually start using what we are going to present you, I think we already did a good job. Because in the end, what we are going to present today only works if anybody is using it. So what am I talking about? I'm talking about a framework we have developed, because hardware, basically, actually, if we talk about the energy transition and solutions to bring this to scale, is more than 70% actually hardware companies. And if we think about the solutions who are already out there in the market, actually, they're almost there already. It's just about how we scale them. And we at Contrarian Ventures, together with EQT Ventures, but also a big community of other investors and also founders, policymakers, we're really thinking on how actually to make this journey actually scalable, how to scale actually the technologies who are already there. Because I see some founders here, but also investors sitting in the audience, as you know, this journey actually scaling a climate tech company is relatively messy. It's very difficult. And what we want to help you with, the Climate Brick manual, is to make this a smooth transition, or a smooth scaling journey, and remove all the friction. Because not like we know it we know it in the software companies, it's often a relationship between an investor and a founder. For scaling climate tech companies, it's very, very different. You have not to interact only with your equity investor, but you're often very much reliable on debt financing, project financing, non-dilutive financing, access to grants, but also, as we discussed in the previous panel, actually, you need to access and interact with policymakers, because a lot of these solutions are actually highly dependent on the regulatory landscape. And so the founder, during the scaling journey, is asking himself a lot of questions and has to build up a multi-stakeholder relationship. And in order to help the founder structure their questions, we actually have developed the Climate Brick, which is, as we said already before, a blueprint to help you understand how to scale your journey. And how have we done this? When we have looked, actually, we have analyzed more than 4,000 companies and have done more than 100 interviews with founders, investors, policymakers, and everybody involved in the ecosystem. What we realized, obviously, every climate tech journey is quite different, and there's not one single journey. But we saw that there are some similarities in how to scale, and we divided these scaling journeys according to the business model, but also the risk appetite of each companies. And so we developed 7 different bricks, which we call gigascaling, green deployment, asset as a service, product disruption, new technology, moonshot, and companion software. And for all these, we developed blueprints which explain and help founders, but also investors, to think from pre-seed to IPO. What do I need to do? When do I have to interact? How does my capital stack has to look like? How much non-dilutive financing do I have to get? How much equity? How much debt? And also how to structure my team? How to build up with the partnerships with my customers, how to structure an LOI, all these questions which comes up through this journey, we kind of like try to make it standardized, easy to read, and hopefully used. So that's what I said before at the beginning. This is a community project and only works if it's actually used. So you can download these bricks at our website, climabrick.com. And I would like to encourage everybody here today to go to the website and download it. So this is what we did 2023, 2024. But then Sophia joined us on the project, and I'm super happy to have her there because she was leading actually the 2025 edition. So Sophia, what is the 25th edition about?
Yes. Before jumping into the findings of 2025, 1 year ago when we launched this, 360 days ago or so, I was actually not with EQT Ventures. I was the Chief Operating Officer of Heart Aerospace, which is a company developing and soon to be building electric hybrid airplanes. Before that, I was an early joiner with Norfolk, so I've been in 2 of these bricks, the gigascaling and the new technology. And I would say I spent, 60-70% of my time fundraising. And not only fundraising, it's also about introducing your new customers on what is needed from them to build new technology and new companies. And when they came to me, when EQT Ventures and Contrarian Ventures came to me and said, we really would like to build these bricks to sort of facilitate this ecosystem, I said, that's perfect, because if we, as founders and operators of this company, could spend maybe 30% of our time on fundraising and explaining how this is going to be built, it's going to help a lot. So, 2025. What have we found? So we have had 1 year of adoption, market fit, and feedback from the community. In 2025, the world looked different than what we looked when we launched in 2024. This year, it's all about economics, execution, and ecosystem. Business criticality. The hype, as some people say, is over for climate tech. I'm not 100% that sure. I mean, if we look at the data that we have worked on for this year, it's actually over 900 companies, equity rounds that have been completed this year. It's actually 31% up from the investments rounds the year before. So you can argue that the hype is over. Yes, maybe, but the investments are still happening. What we mean with the hype is over is that this technology that's going to survive this next wave are the ones that are going to be business critical. So the nice to have, those companies we see are going to have much harder time fundraising. Push for cost ramp down and profitability. That's something that is very important this year, what we see. When you present a financial model that is relying on subsidies and green premiums, it's not that attractive anymore. These companies that are putting products on the market, they need to be cost comparison at scale, and you need to reach scale quite fast, but they even need to be higher performance or even better than the existing product to be adopted by the industry. So there has been a shift in that. Navigating the macro perspective, everyone knows what's happening in the world now. Before we could say that, some portfolio companies, they moved to USA for the policy in the USA. Now we don't know exactly what's happening with the IRA. But navigating this and these different shifts, it's going to be important. And integrating resilience into your business model is going to be crucial and not an afterthought. Strong execution capabilities. If you're building a gigascaling, for example, or if you're building manufacturing anything, having a team that haven't done it before, it's going to lower your chances to be funded. To have a C-level, but also the middle management team that actually know how to industrialize a product is going to be very important. And I think today we're also looking more at the board level and at the advisory level. And I think looking at boards, I know when I was with Heart Aerospace and also with Norfolk, I was a little bit frustrated that investors came in, like ourselves. They put themselves there, and they just want to talk about fundraising and financing. So I think that there is a work to be done on board levels to really put people, right person on the right seat, making sure that you have industrialization capabilities all through the decision-making and execution of the company. Be on top of late-stage financing early. It's not that attractive anymore to say that we will fix the later-stage funding when we get there. I think if you're coming with a company or a business plan today, you need to have a very clear path to be fully funded. And that can include debt financing, grants, and of course equity. But only relying on equity in a high capex company, we knew from before that that was not possible. But at some extent, I think we have learned a lot about, there is much more experience now what it takes to actually project finance new investments. Customers are becoming more and more careful in giving these big offtake contracts. So really have a solid plan for financing is going to be something that it's going to be important to present in 2025. We have also built a completely new, brand new website that we are super proud of. It's moving really fast, so I'm not going to talk you through it. But there's one thing to point out, that some founders and operators came to us saying that we don't know which brick we belong to. So we have included a very cool feature. We're actually proud of it. AI, that's so cool now. An AI feature where you can type in your URL, and they will actually navigate you to the bricks that you belong to. And it's, let's see here, we're taping Marvel Fusion that we're going to speak with soon. You will see that you are a moonshot if you thought something else. And it's very common that you actually belong in 1, 2, or even 3 bricks, and then you need to sort of navigate your different bricks to make sure that you capture of it. So this is the moonshot that we're discussing in a minute. But it's a very nice web page. New content, very related to the findings in 2025. Let's move forward. So, building a movement. The framework in itself is great, but the most important is really the community around these companies, these climate tech companies. And I think that without the community, this framework is not going to come very far. It's really about using the bricks, feedback on the bricks, share your data with us so we can use it for the next year. But then also the last part, which I think is the most important, many of our founders out there are actually fairly new, young founders, maybe first-time founders. They come out of university with a great idea, but they're completely lacking network. So what we really want to emphasize and to inspire you all with is to create more network opportunities for everyone. How can a founder meet someone in supply chain if you are a recycling company, for example? Or how can you introduce them to the decision maker of a customer that could be vital into this? Also the CVCs, you know, sort of more networking around these companies is going to be crucial because these companies are not being built only with equity. It's really the full ecosystem that need to contribute, and we all need to sort of bring our piece to the table. Climatebrick.com. Log in now. We're tracking data, so if everyone can just log in and see, we'll click around a little bit, we will have some good feedback to our teams back in EQT and Contrarian. So that's all for us. Now we're going to have a really exciting fireside chat with Rokas from Contrarian and with Nicolas, CFO of Marvel Fusion, one of the most exciting companies right now, I must say. So welcome up. Thank you.